Welcome to Market Brief After Hours. We have a massive show lined up today. Global markets just staged a powerful rebound, and it is all tied to some major geopolitical news. We are talking about a sharp recovery in risk appetite, surging equities across the board, and one of the steepest declines in oil prices we have seen in years.
It really was a historic session. The main catalyst here is the announcement of a conditional 2-week ceasefire between the United States and Iran. For weeks, global markets have been weighed down by the severe disruptions linked to the Strait of Hormuz. Removing that immediate uncertainty triggered a massive relief rally as investors quickly rotated back into equities.
Let's dive right into the key takeaways, starting with the U.S. indices because the numbers are staggering. The Dow Jones Industrial Average jumped 2.85% to close at 47,910. That is its best session since April 2025. The S&P 500 climbed 2.51% to finish at 6,783, and the tech-heavy Nasdaq surged 2.80% to end the day at 22,635.
Those numbers reflect a massive, broad-based buying frenzy. For the S&P 500, the gains were spread across nearly all sectors. Technology, industrials, and consumer discretionary stocks really led the advance. The Nasdaq surge was heavily supported by semiconductor names. We saw the VanEck Semiconductor ETF rise over 5%, with individual standouts like Broadcom gaining nearly 5% and Micron Technology climbing over 7%.
Looking at the geopolitical side of this, I think the ceasefire might be fragile, but I am not sure. A 2-week window seems incredibly short to resolve such deep-seated issues.
That is the critical nuance of today's market action. The agreement allows conditional passage through the Strait of Hormuz, which instantly eases immediate supply concerns. However, the 2-week timeframe guarantees that volatility is not going away anytime soon. Investors are buying the relief, but underlying risks remain elevated. The market is essentially asking how durable this agreement actually is and what the broader geopolitical outlook will be once these 2 weeks are up.
That uncertainty certainly didn't stop international markets from joining the rally today. Over in Europe, the STOXX 600 rose 3.7%, with every single sector except oil and gas moving higher. Travel and leisure stocks actually led the gains with a 7.1% rise.
The country-specific indices in Europe were remarkably strong across the board. In the UK, the FTSE 100 gained 2.44%. France saw the CAC 40 jump an impressive 4.49%. Germany's DAX rose 5.06%, Italy's FTSE MIB advanced 3.70%, and Switzerland's SMI climbed 2.53%. What is fascinating is that this massive European rally happened despite some very mixed economic data.
Right, the data wasn't exactly stellar, was it?
Not at all. Eurozone retail sales actually fell 0.2%, and the construction PMI dropped to 44.6. Over in the UK, construction cost inflation surged to 70.5. We did see German factory orders rise by 0.9%, but overall, the market completely looked past the macroeconomic data and focused purely on the geopolitical relief from the ceasefire.
Asia-Pacific markets followed the exact same script. South Korea led the way with the Kospi surging nearly 7% and the Kosdaq rising 5.12%. Japan's Nikkei 225 gained 5.39%, and we saw solid gains in China with the CSI 300 up 3.49%. Hong Kong's Hang Seng added 3.1%, Australia's ASX 200 rose 2.55%, and India's Nifty 50 advanced 3.78%. It was a truly global wave of green.
It was. Even New Zealand's NZX 50 gained 1.4%, despite their central bank holding rates at 2.25%, with inflation still running above target. The sentiment shift was just that powerful.
We are going to dig into the collapse in crude prices, the latest moves in the Forex market, and some specific stock movers right after a quick break. Stay with us. Welcome back to Market Brief After Hours. Before the break, we touched on the massive global equity rally, but we have to talk about the other side of this geopolitical coin, the total collapse in oil prices. U.S. West Texas Intermediate crude plummeted over 16% to $94.41 a barrel. That is its biggest one-day drop since April 2020. Brent crude also declined around 13% to $94.75.
The oil market had been pricing in a worst-case scenario regarding the Strait of Hormuz. With the conditional passage now allowed, that massive risk premium vanished overnight. And this drop in oil has a significant ripple effect across the economy. It instantly alleviates a lot of the concerns around energy-driven inflation. Because of that, we saw U.S. Treasury yields move lower today. The 10-year yield fell to 4.301%, the 2-year dropped to 3.79%, and the 30-year went down to 4.891%.
And that drop in yields is drastically shifting expectations for the Federal Reserve. Market odds for a rate cut have now climbed above 43%.
Precisely. Lower inflation fears give the Fed much more breathing room. Interestingly, though, lower rates haven't translated to a boost in the housing market just yet. The average 30-year mortgage rate eased to 6.51% from 6.57%, but U.S. mortgage applications still declined 0.8% this week. That extends a 28.5% cumulative drop over the previous 3 weeks, showing that demand remains very subdued despite slightly better borrowing conditions.
Let's pivot over to digital assets. Cryptocurrencies also caught a bid today. Bitcoin rose 3.6% to $71,345, with trading volume surging 61% to over $54 billion. The broader CoinDesk Market Index gained 3.3%. Ethereum climbed 4.7%, XRP added 2.9%, Solana rose 1.9%, Dogecoin increased 1.1%, and Cardano advanced 2.8%. It was a broadly positive day, even though BNB slipped slightly by 0.5%.
The crypto space is benefiting from the broader risk-on sentiment, but there is a specific catalyst at play here too. The upcoming launch of Morgan Stanley's Bitcoin Trust on the NYSE Arca is generating a lot of momentum. They are coming in with a 0.14% fee, which significantly undercuts BlackRock's 0.25% fee on their iShares Bitcoin Trust. Morgan Stanley oversees roughly $2 trillion in assets and serves around 15,000 advisors. This positions them perfectly to capture massive flows in a spot ETF market that has already attracted about $88 billion.
Let's shift gears to the Forex market because there is some fascinating technical action happening, particularly around moving averages. Starting with the euro against the dollar, Euro USD closed at 1.1668, up 0.63%.
The euro is putting in a firm bullish session, but it is facing a very tight cluster of moving averages right overhead. It is hovering just below the 50-day simple moving average at 1.1682 and the 100-day SMA at 1.1685. It is managing to hold marginally above the 200-day SMA at 1.1673. We are seeing a developing base with higher lows, but those moving averages are acting as a heavy ceiling right now. Immediate resistance is right at 1.1722.
We are seeing a similar technical struggle with the British pound. GBP USD closed at 1.3405, up 0.84%. It posted a strong bullish candle, but it is still trapped below its key moving averages.
Exactly. The pound remains below the 50-day SMA at 1.3448, the 100-day at 1.3420, and the 200-day at 1.3418. So, despite the strong daily move, the broader structure is still under pressure. Contrast that with the Australian dollar. AUD-USD had a fantastic day, closing at 0.7052, up 1.10%. It fully reclaimed its 50-day SMA at 0.7024 and is sitting comfortably above its 100-day at 0.6843 and 200-day at 0.6691. That pair is in a very established uptrend with consistent higher lows.
And what about the US dollar against the Japanese yen? USD JPY pulled back a bit today, closing at 158.52, down 0.67%.
That pullback looks purely corrective after a very extended rally. It is still well above its 50-day SMA at 157.12, the 100-day at 156.76, and the 200-day at 152.94. The broader trend there is firmly bullish. It just looks like some standard profit-taking after recent gains.
We should also quickly touch on the precious metals. Gold stabilized, closing at $4,730, up 0.61%.
Yes, gold is holding above its 100-day SMA at $4,651, while remaining below the 50-day SMA at $4,932. The 200-day SMA at $4,140 is still underpinning the broader uptrend there. Silver also recorded a strong rebound, up 2.14% to $74.50. It reclaimed ground above the 100-day SMA at $75.39, while remaining below the 50-day SMA at $81.57 and well above the 200-day SMA at $58.81.
Before we wrap up, let's look at some specific market movers today. Meta Platforms had a standout session, jumping 6%.
Meta introduced a new AI model called Muse Spark, which they plan to integrate across their major social media applications. The market loved that announcement. AI continues to be a massive driver for tech valuations. We also saw Air Test Systems soar 25% after an analyst upgrade to a buy rating with a massive price target of $68.
We also had Levi Strauss climbing 10% after beating quarterly earnings expectations and raising their full-year profit guidance. But it wasn't all green out there today. The energy sector took a massive hit.
That was the direct result of the collapsing oil prices we discussed earlier. Energy producers are highly sensitive to rapid changes in crude pricing. APA Corp fell more than 9%, while Marathon Petroleum and Occidental Petroleum each lost more than 5%. It was a brutal day for energy stocks, completely diverging from the broader market rally.
It really highlights how singular catalysts like the ceasefire can create massive winners and losers in a single session. The risk landscape has been reset for the near term, but everyone will be watching to see if this diplomatic progress holds up.
Absolutely. Market participants will be closely monitoring the reopening of the Strait of Hormuz. If tanker flows resume smoothly, this rally might have legs. But if talks break down, we could see a rapid return of volatility.
It is definitely a complex geopolitical environment that requires close monitoring. That is all the time we have for today's deep dive into the markets. If you find this useful, please follow Market Brief After Hours. We will see you next time.